What if you could save a serious amount on your taxes while supporting the environment and leaving a lasting legacy? Sounds too good to be true, right? But stick with me because I'm about to show you exactly how to do just that. Imagine not only slashing your tax bill, but also preserving the environment for future generations. This is a smart, effective way to make a huge impact and no land ownership required. And stay tuned until the end because this simple strategy could not only save you money on your taxes, but could also change the way you think about giving back. I'm Rich Smith, and I help business owners and high net worth individuals learn about tax incentives and how to make a real difference. If you want to learn how to leverage conservation easements for big tax breaks, you're in the right place. When I first heard about conservation easements, I didn't realize how powerful they could be. Like many of you, I assumed they were only for landowners. But once I dug into the details and examined the tax code, I saw how business owners, investors, and people like you could benefit from major tax savings while helping the environment. Today, we'll break down how conservation easements work, the tax benefits you can gain, and why this strategy could be a game changer for your financial future. Whether or not you own land, this is something you can use to your advantage. Many business owners think conservation easements are out of reach or just too complicated to understand. But once you truly know how they work, you'll see why it's one of the smartest moves you can make. Not just for your taxes, but for your legacy too. What is a conservation easement? A conservation easement is a legal agreement between a landowner and a conservation organization or a government agency to preserve the land in its natural state. But here's the cool part. Most times the landowner still retains ownership. They can live on it, farm on it, or even pass it down to their children. But certain development rights are restricted to help keep the land in its natural or productive state. You see, it's a win-win arrangement because you preserve the land forever, but you can still own it. Now, let's take this a step further. Let me be clear here. You do not need to own land to take advantage of these benefits. You see, there's something called syndicated conservation easements that allow you to pool your resources with other investors to fund the purchase of a conservation easement on land that you personally don't own. And this makes it accessible for non-land owners to get involved and benefit from the same tax advantages. You might be wondering, why should someone like you, who's busy running a business or managing substantial assets, care about conservation easements? The simple answer is tax savings. If you're a high net worth individual or business owner, a conservation easement can allow you to deduct the value of the development rights of the land. And again, if you're part of a syndicated easement, you can benefit from this without ever personally owning the land. So here's a breakdown. Under Section 170H of the IRS code, you can receive significant federal tax deductions for donating the development rights of land to a qualified conservation organization. These deductions can offset up to 50% of your adjusted gross income, your AGI, and in some cases, you can even carry forward these deductions for up to 15 years. For high net worth individuals, business owners, and wealthy families, this can mean serious savings. Think of it as a tool for estate planning, tax reduction, and even wealth preservation for the long term. Let's talk about an important concept here, something referred to as highest and best use land valuation. This concept plays a huge role in conservation easements because it helps increase the tax benefits by showing the maximum value the land could have under an optimized and often different use. For example, let's say you have land that's currently being used for farming, or let's say it's completely left undeveloped right now. And the highest and best use might be to convert it into a solar farm, an aggregate mining operation, or even commercial real estate. Now, follow me here. By appraising the land based on its highest and best use, you can unlock greater tax deductions because the appraised value of the land would be higher than if it remained as that farmland or undeveloped land. It can be difficult to find comparables to set a valuation on a specific piece of land. So, by getting it appraised and leveraging the highest and best use of the property, you can actually maximize the tax benefit. And yes, let me say this right now, the IRS recognizes this approach as long as it meets their conservation easement requirements. And let's get into the IRS. Recently, they've taken a more aggressive stance on syndicated conservation easements, particularly those that inflate the value of the land through inflated appraisals. So naturally, in response to some of the abuses of the system, they've issued regulations identifying certain syndicated conservation easement transactions as listed transactions that must be reported to the IRS. What does that mean for you? First off, there's nothing to panic about. Legitimate, well-structured conservation easements are still an incredibly powerful and compliant tax strategy. IRS regulations are designed to target abusive tax shelters, the kind that involve those inflated land appraisals or high promoter fees. And that makes sense. The IRS is focused on preventing abuse by cracking down on bad actors who use these strategies solely for tax evasion. Here's the good news. Legitimate conservation easements that follow the right procedures, such as using the highest and best use valuation and working with experienced professionals, are still a viable tax strategy. In fact, recent Supreme Court rulings, including the SEC versus Jarcussi case and the Chevron ruling, have made it easier for investors to work with the IRS under a fairer system. What these rulings mean is that as long as the transaction is conducted properly, the IRS has less power to scrutinize it unfairly, which means more security for your tax planning. So let me walk you through how conservation easements actually work. Here's a step-by-step guide. First, there's the decision to place property under a conservation easement to protect it from future development. Next, you work with a conservation organization or a government agency to draft the easement. This is where it's crucial to have a reputable partner who can guide you through the process. From there, you have the land appraised for its highest and best use valuation. Remember, this means if the land could be used for a more valuable purpose, like that solar farm or real estate development, and that appraised value of the land is its highest and best use valuation, then it'll probably be valued higher, and that thus increases the potential tax deduction. So once that's all sorted, then comes enforcement. Once the easement's in place and the conservation group or the government agency monitors the land, they simply make sure that it's remaining in its natural state, even if it's ever sold to a new owner. And lastly, but certainly not least, are the tax benefits. When the easement is in place, you can claim the available tax deductions based on the value of the development rights donated. And yes, that means that legitimate syndicated conservation easements allow non-land owners to invest in the easement and, yes, claim their share of the tax deductions. Let me make this part crystal clear. You don't have to own land to benefit from a conservation easement. To my landowners out there, if you own land and want to preserve it, you can take advantage of the tax deductions by donating the development rights. Non-landowners, through syndicated conservation easements, business owners, high net worth individuals, and even family partnerships can pool their money with others to fund a conservation easement on land that they don't own. Essentially, this allows them to receive tax deductions without having to own the land themselves. So moving on, let's talk about key benefits of conservation easements. For the sake of this video and this audience, the first one is tax savings. Whether you're a landowner or an investor in a syndicated conservation easement, you can offset up to 50% of your AGI, and that's a huge savings on your overall tax bill. The next benefit is preserving the land forever. This helps preserve open spaces, wildlife habitats, and farmland for future generations. You see, this is not only about tax strategy, but also it's a long-term investment in sustainability. And if it's not obvious, another benefit is legacy building. Conservation easements can be a way to leave a legacy by ensuring land remains protected for generations to come. Zooming back out, let's take this all in. Conservation easements are a powerful tool for anyone wanting to reduce their tax liabilities, preserve the environment, and create a lasting legacy. By utilizing that highest and best use valuation, you can maximize the potential of these strategies and get even greater tax deductions. And thanks to recent legal developments, there's been no better time to seriously consider using a conservation easement as a tax strategy for your family or business. How can you take advantage of one of these? Start saving on your taxes while supporting the environment? I'll leave a link down below in the description of this video to help get you on the right path and decide if a conservation easement is right for you. Remember, if you're facing a liquidity event or a large tax burden, partnering in a syndicated conservation easement could allow you to offset those taxes in a way that directly benefits the environment and your bottom line. I'm Rich Smith, and I help business owners and high net worth individuals learn about tax incentives and how to make a real difference. I invite you to check out the link in the description to learn more about land conservation easements, and leave me a comment on this video letting me know what you want to see next covered on this channel.